Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again on the gold market. So in today's report we have considered a few interesting topics that actually were really very popular in last week. Particularly speaking, this is the Fort Knox audit gold reserves in the United States possible. It's a revaluation by market price, what the consequences might be for the United States if they will do, and in general, what really the idea of the revaluing of the gold reserves, why actually this is important for the Donald Trump team and why they intend to do this. It is naive to suggest that they do not know what's really stand now in Fort Knox. Obviously they do it perfectly and know what's going on there, but there's some opinions exist on this subject. Also, we have taken a look at the general situation and at some alternative ways of the forecasting of the gold price, which might seem really interesting. Usually we are following either the big analysis on the big banks such as Goldman Sachs, Morgan Stanley and so on, or as we do, for example, we use long-term technical targets, but also it might be statistical approach for forecasting of the gold price and also a fundamental approach, particularly in relation to the gold production cost. So all of them provide some target levels which might be really surprising. So I think that report is really interesting this time, and it's actually not really big. So hopefully you will enjoy to read it. Speaking about the short-term technical situation, we considered performance last week was not too strong. Actually, as we said, market right now stands on the point where as technically as fundamentally, the chances for retracement increases significantly. From the technical point of view, we do know that gold market right now overbought on all time frames, starting from the daily and up to the weekly, monthly, quarterly, half year and the yearly chart. In all time frames, market is overextended. Market stands in an area of the all-time OP, which is 2865 area. Here it might be has been passed already, but in the perspective by the look of the hourly yearly chart, it's actually market stands around it. So $100 around the target, it's nothing for very long-term time frame. Second is from technical point of view, market at the yearly pivot resistance one, and a combination of these targets, resistance levels, technically increases significantly the chance from the pullback. So fundamentally, why we think that retracement is possible? Because market right now might appear in a temporal information vacuum. It's just because the Donald Trump team is just started to work, and results of this work are not yet been manifested. So it's not clear yet, and it needs some time to see in what direction everything goes. So it might be described as an uncertainty, and while this new reality will start forming, the gold might appear in some kind of, as I said, period where no big information, no big drivers will appear, and that will make it to moving sideways or even show some pullback. This is normal. So that's why on a daily chart we're still considering possible appearing of the double repo pattern. And actually I would say that here market is coming to most important point, because double repo is based on the capitulation of the bears, and as you understand, capitulation can't last too long, so it usually should happen fast. After the initial drop here, it might be some pause, but the drop itself should happen relatively fast, because that's the idea of the capitulation. It means that within the next week we either should get this capitulation or market could keep going to the next destination point, which is on a weekly chart, as you will see, stands around 30-40 area. 3040. So since these targets on the big charts already has been completed, our prediction has been finalized with this great looking butterfly target, so which is also actually potentially bearish pattern. So nothing stands from technical point of view for the next upward direction, except if market is not preparing any retracement at all. So normally, if retracement should happen, and it has to start right from here. If it will not start, it means that our prediction will continue. And we're coming to this very important point. On the lower time frames, on the 4-day frame chart, I do not see yet any big shifts, so our diversion still stands in place, wedge pattern still is in place. On the hourly chart, market is almost completed the shape of the hand shoulders that we discussed on Friday. So that was our upside target. We said it better to close and watch for performance here. So if you do not want to wait for a clarity with a double repo, or in general on a daily chart, or in general you prefer to anticipate this pattern, or you like to take position somewhere in the early stage of the reversal, these hand shoulders might help you. Besides, this pattern probably will be kind of the signal, as usual happens on the top. Now market stands, you can see, at the top of the right arm. It means that decision has to be made on position taken on Monday. This is the best point to consider position taken. As you know, that's top of the right arm. It's always the point where we make a decision on the position taken on the hand shoulders. So if gold market indeed turning bearish in short term, and it intends to show the retracement will start with these hand and shoulders. These hand shoulders will start working, and later maybe we'll get the confirmation of the double repo finally. If hand shoulders will fail and market will just keep going higher, returning back to the top, it means that first we're going to the 2964 to complete this target, but potentially it might be a possible action to the next two extensions around 3000. So 2976 first with this minor butterfly, mostly to the 2990, or better to say 3000 area. This if hand shoulders will fail. So we have to be prepared for a possible upward continuation. So, and we should probably know this at early stage. So that in towards what we have on the gold. It's a bit scary, trying to take the short positions on top after the strong rally and with all fundamental background that we have. But we have clear patterns, so let's keep it simple. So we have patterns, we have potential double repo on the daily trend has turned bearish. We have potentially short-term bearish patterns in the way of the butterflies here in hand shoulders. We have potentially bearish pattern with this butterfly pattern on the daily. So we have a reasonable approach to the risk here. Our risk could be very small, so around 10-15 pips or even smaller, because we could just place slightly above, so around 29.49, 29.50 it will be enough. Because hand shoulders should keep it shape and start downward action. If it will not do this, it means that something is going wrong, and we do not need to risk too much with this. So all these factors are actually makes the normal trading plan for dealing with the current situation, current patterns that we have in place.